Happy Halloween. How are you doing?
Yeah, it is happy Halloween. It's a Halloween in markets. The S&P down 100 points.
A little spooky. A
It's a
little
little spooky.
spooky.
Yeah, it is. What's going on in the UK? The pound sterling is having a little bit of a tumble.
I don't have any read through to that to be perfectly honest. It's not really affected the Dixie, which is flat on the day. Trying to put my finger on why gold price is down so significantly today. But I don't usually put too much credence in single day moves. Do you have an answer to that?
I don't have an answer to it, and I was also sort of puzzled, but I think it most likely has something to do with the market pricing in fewer Fed rate cuts, just because the economy is not maybe quite as weak as it appeared like 6 weeks ago.
Sure.
Um, but who knows? I mean, gold has had a tremendous. I mean, up 40 at the highs on Wednesday. It's up 40% year to date, right? So we have to
That is
put it.
not supposed to happen with the gold
Yeah,
price. we
we
gotta
have to
we
put
gotta
it
keep
in.
in mind.
Yeah, we got to put it into perspective that gold does not make 40% moves in 10 months very often. I think it might have happened twice in history. So, um, yeah, I
Yeah.
think it's normal. It's a bull market, and in bull markets you get violent shakeouts. You get violent short term drops. And it happens once every 6 weeks or 8 weeks, and so we're just experiencing that right now.
Right. And to your point, I mean, personally, I'd love to see a 3, 6, even 9 month consolidation in the gold price, to be perfectly honest, and to see technicals reset. We've had such a tremendous move, historic move, over the course of this year. Wouldn't mind at all to consolidate those gains and maybe see some of that excitement flow elsewhere into the metals complex. I mean, the past few gold moves we've had to this degree, it's acted as a bellwether for the rest of the metal space. And as you know, we have plenty of precious metal exposure within the MJG portfolio. Roughly 35% of our weighted portfolio is exposed to either gold, silver, or the PGMs, but plenty of other mouths to feed as well. Copper being our largest allocation at roughly 35% of the portfolio. So will be interesting to see if some of this some of these animal spirits spill into other metals. I mean, you'll remember the 2020 run up in the gold price was a exciting 6 to 9 month period, and that led the way towards the rest of the metals complex really ripping in 2021 and at least through the first half of 2022. So I'm interested to see whether that repeats this time around. I personally think it will, as long as the broader markets stay in kind of this buoyant risk on sentiment, and that's hard to predict when next we'll go into a true risk off liquidity panic, and whether that's something to look for in 2025 or whether things stay pretty sanguine for the foreseeable future here.
Yes. Yeah, we can't time these panics. By the way, this is Matt Geiger, CIO of MJG Capital. Um, I want to start with just overall junior mining sector performance. How has the fund performed in Q3? Like, I know you had a pretty strong first half of the year, but do you have more gains to report in Q3?
Well, we're a long-term oriented fund, so I only report results to partners, believe it or not, twice annually. So I don't feel comfortable giving our year-to-date performance through the end of Q3. I'll be putting out our next investor letter in January 25, which will give our full year performance. I will say that Q3 was a frustrating quarter. Roughly flat is what I would say for the period. And look, this year's been characterized by, I mean, it's particularly amongst gold and silver, but amongst many metals in the industrial complex, the energy metals aside, strong metal prices, and again, particularly in the precious metal space, the producers performing very well over the past 3 to 6 months. Um, In terms of the juniors, they've been broadly left behind. Though I will say, I think that changed basically on a dime. We could say last week of September, first week of October, at least within the MJG portfolio, and also judging by the TSX-V, that looks like it may have been an inflection point. And if we talked a week ago, I would have told you that we were on pace for our best month of performance dating all the way back to December of 2020. Now, unfortunately, these past 4 or 5 trading days, we've seen some of our names retreat a little bit. Nothing to be concerned about, and kind of healthy after a really sharp run over a 3 to 4 week period. But we've really seen a major response, at least within the MJG portfolio, and I think we're seeing that trickle down finally occur more broadly across the junior space. Just names that I've talked about publicly in past MJG investor letters. Lara is up over 40% just in the month of October. Ridgeline, the most recent featured investments, up roughly 40% just in this past month. Names like Kennerland and Star also up double digits. So that gives you a sense that our larger and higher conviction portfolios are finally seeing that response after, again, what's been a frustrating period for a lot of this year.
Yeah, it's interesting. I just pulled up the chart of the venture composite, and it's something that I had blogged about about 10 days ago, and sort of how it had broken the 600 level, which had been a key level for the last few months, and it looked like we had a confirmed breakout. We still might, but it's retesting the breakout right now. Like
That's
today,
right, as we speak.
it's retesting it. Which can happen, I mean, especially here we are getting towards the end of the year, and these tiny little stocks tend to have some tax loss sort of action around this time. So maybe we're seeing a whiff of that here, a very unwelcome bout of selling here the last few days. But hey, it is what it is, and I don't think all is lost. This is still an uptrend in the venture, and I would really probably need to see a breakdown under 575 to get worried here.
That's right. That's a 200-day simple moving average, to my understanding. The 200-day EMA is roughly around there, so we're still comfortably above those levels, even after painful 3 or 4 days that we've experienced.
Today is definitely a rough one for sure. It's a Halloween swoon in the juniors.
Coupled with the pre-election jitters, I don't think we should discount that either. It may be a few more similar trading days here before we make it through November 5th, hopefully intact.
Yeah. I was teasing about that we would talk, about the election. I have no intention of talking about the election. I just hope that we can get it over with and be all in one piece, like by the time it's done. I do want to ask you a tough question though, because that's why you're here. Is this a new bull market in the junior mining sector? Like, are you comfortable, emphatically stating that this is a bull market?
I am. Again, the big caveat there, and it's always been, is whether the broader markets stay largely risk on, as they really have been since the Fed rate hike tantrum that we saw in mid 2022. But I feel very good with where we sit, and there's a few factors for that. First is that the metal space is actually quite well cashed up. There was some good data out of the TMX group a couple months ago, and they shared that if you look at all the mining issuers on the TSX and the TSX-V in the first half of 2024, $6.8 billion was raised. Now, again, it's a story of the haves and the have-nots. So this is not all going down to your favorite junior explorer by any means, but money is being raised. And the 6.8 figure in the first half of 2024 compares to 4.2 billion in the first half of 23. So roughly 50% increase over what we saw in the previous year. And if you go back to 2022, over the course of that entire year, only $4 billion was raised. So pretty remarkable, well over 50% higher just in the first half of 2024 compared to the whole of 22. So that tells me that at least relative to recent years, mining equities and mining issuers in general are pretty cashed up. And when you're cashed up, that means more news flow, less dilution, and in theory, longer runways until the next financing, which can augur share price appreciation in that period. The TMX group even said this is the most money raised in the first half of a year in at least a decade. So if we take them at their word, this was a very significant period. And then you actually shared some interesting data, I believe just yesterday, showing that if you go down to the TSX-V and actually look at the junior issuers in the month of September, we saw more than double the amount raised in September 2024 relative to September 2023. So this trend seems to be continuing, where there is capital available, companies are raising it, and this is going to be good from a news flow perspective. So that excites me. Second point, we largely touched on at the beginning of this call, the absurd move that we've seen in the gold price. And at least in recent history, gold has served as a bellwether for much of the metals space. Whether you look back to the strong run in 2016, which was then followed by strength more broadly amongst the metal sector over the next couple of years, or looking back more recently to 2020, where precious metals rallied very strongly between the spring of 2020 through early Q4 of that year, only to see the rest of the metals complex really take the baton and have a very strong 2021, first half of 2022. Obviously lithium performed well through most all of 2022. Uranium did well in 23. So I do think that if the broader market stays largely risk on, we'll likely see a similar phenomenon here, where we'll see some of this money flow out of precious metals and come elsewhere into the metals complex. And then, of course, and I'm sure you've touched on this in recent interviews, I certainly have as well, but the M&A bonanza that we've seen just in the last 90 days is, borderline historic. It's been a wild period here. 6 deals come to mind. It really kicked off with the Filo tie-up with BHP and Lundin Mining in late July. That was just 90 days ago, $4.1 billion deal there. A couple weeks later, we saw Gold Fields come in for an all-cash takeover of Osisko Mining, $2.1 billion there. Just before Beaver Creek, the First Majestic and Gata Silver tie-up. That's another $1.5 billion or so Canadian in that case. While both of us were at Beaver Creek, Anglo Gold's move for Sentiment, $3.4 billion. And then this month, we've seen Core move for Silvercrest, another $2.4 billion. And then the granddaddy of them all is Rio Tinto's move for Arcadium just 2.5 weeks back, $9.2 billion there. So in a 90-day period, we're looking at 6 deals with a combined total value of $22.5 billion. This is significant. And of course, you've seen plenty of other smaller deals announced along the way. These are the kind of the market movers. And I think this is good for the space and a whole host of reasons. Particularly given that a good percentage of the Filo deal, I think it's $4.1 billion in total value, but I believe $2.7 billion of that is cash, and then of course Osisko Mining with Gold Fields, that's an all cash offer. So we're at basically $5 billion of cash trading hands, from major miners into hands of investors, and some of that's certainly been redeployed as shares have been sold to arbitrage traders and what have you. But as those deals close later this year, in the case of Osisko Mining, and early 2025 in Filo, we're going to see additional cash injections that I do believe will find its way back into the mining space. So combination of the mining equities being cashed up, gold price doing extremely well, and the potential for that spilling into other metals, and then of course this really substantial M&A binge makes me feel very, very good about where we sit. And juniors have been moving for a few weeks, but this move certainly doesn't feel toppy by any means. And then the very final point I'll make is that if you go back to 2016, you go back to 2020, those were very exciting periods. Let's just look at the precious metal space in those two cases. But we had the metal price, the major producers, and the juniors really over both of those periods move largely in tandem. And a lot of ground was made up, but at least amongst precious metals, those seem to be largely flashes in the pan. This time around, it's been entirely different. We saw the gold price move, largely driven by central bank buying, then some retail support in the developing world. Precious metal majors have caught up to some degree, but still aren't exhibiting the leverage that one would expect to a gold price move of this magnitude. And now we're finally seeing the juniors, start to see some attention. But this is how drawn out cycles are supposed to form. And my hope here is because we've seen this kind of delayed effect between the metal move, then the big miners responding, and now maybe the juniors responding. This could bode well for the duration of this move, and it could be more long lasting than the flashes in the pan we saw back in 2020 and 2016.
That was very well done, and thank you for reminding me of all the M&A transactions over the last couple of months. I had forgotten about a couple of those deals. They weren't top of mind at least, but the total dollar figure is quite impressive, and certainly
It is
something that we haven't seen in a long time. In fact, in such a short period of time, maybe not ever, except for maybe like when there's a mega deal done. But yeah, that is quite, notable. With Newmont, and companies like Barrick and AEM, they're generating pretty significant levels of free cash flow at these gold prices. Like, everybody hated the Newmont quarter, but they still generated 760 million of free cash flow. So you have to wonder, what's possible if gold stays up above 2,500 for another 6 months or a year. I mean, these companies are going to be overflowing with cash. So far, most of the majors are just choosing to use that cash to buy back their stock and pay dividends. But I think that if gold does stay up here, they will definitely have the financial fortitude to make more deals. Like, what's your sense for where we are at in this cycle? I mean, is it still early?
I do think it's still early. I think you need to look at the major miners on a case by case basis. Newmont's already gone through a massive acquisition with Newcrest, which closed earlier this year, so they're probably going to be digesting those assets for some time. Barrick has the capacity to make a move, and Bristow's been talking about it for a couple years here, but as of yet, we haven't seen them do anything particularly aggressive. I think what Agnico Eagle is doing is quite interesting. They're obviously printing cash. They are increasing buybacks, increasing that dividend, returning values to shareholders. But I think the conventional opinion, and I would argue that they are the smartest group out there amongst the major miners. I find it very interesting that at least some of this free cash flow they're generating, they're redeploying, but not into precious metals, but into battery materials. We've seen them do a couple deals that one would not expect to see from Agnico Eagle. The first was their strategic investment into Canada Nickel earlier this year, and then of course their $40 million investment just down in Chile earlier. This must have been last week when they announced that deal into ATEX, taking a 19.9% position there in a jurisdiction where, to my understanding, they don't have any significant exposure, and also into a metal, copper, that we haven't seen much of a focus on from Agnico Eagle, at least. Does this continue on their front? Perhaps. But I think it's notable that some of the smartest allocators in the precious metal space are actually taking some of this money that they're generating and deploying it into non-precious metal assets. And maybe that could be a harbinger of things to come for the metal space more broadly, or a hint to investors that maybe if they're all in precious metals at the moment, it could be something that they're considering doing as well.
Yeah, I'm glad you brought that up because that definitely stood out on Friday. You have a major gold miner going to South America to invest in a porphyry deposit, a deep one, a very deep one, that some people had many questions about the economic viability of that project, just because of how deep it is. And, the grades are good for a porphyry, but it's not considered high grade. I wouldn't say 0.67% copper equivalent is high grade, but some key details there. There is a higher grade core of that, deposit that they could go into first and mine that to get their capital payback first. And then you'd have the lower grade stuff for the rest of the mine life. So it is notable that you have AEM going into copper and other base metals when they're considered to be a gold mining company. And I think we're going to see more of that from the majors, just because they see where the puck is going and they want to be there when it gets there. And I think copper is where the puck is going.
We'll see though. There's mixed opinion.
Mhm.
I think they're going to be able to pull this off, and I think it's some smart counter-cyclical deployments here from Agnico Eagle. But I saw another well-known mining commentator who I respect recently saying he thinks that this push into non-precious metals by AEM will end in tears. So we will. The jury is still very much out. We'll see over the next few years. I think it's going to take a number of years for us to judge whether this was a prudent use of their capital or whether they should have gotten more aggressive in acquiring gold focused assets, or just continue to increase that dividend even further than they've done due to these deals.
It's funny because I do want to talk about your portfolio and some of your holdings and some of the deals. Like, for example, Star Royalties had news on its Copperstone royalty just a couple days ago. I definitely want to discuss that. But first, I want to ask you, we've joked, before about the quote that sometimes it feels like, we're, heavily sexed man in a whorehouse in the sector. There's so many opportunities out there. There's so many, seemingly deep value ways to, you know, uh, you know, expose our capital. And I feel like today, like I'm, like an oversexed man in a whorehouse. Have you been adding any new exposure to your portfolio?
Largely, no.
No.
I mean, you'll remember we had a conversation basically this time last year, just at the beginning of Q4, and I think in that case, the MJG partnership got its timing down pretty well, because at that time we were holding 14% cash weighting within the MJG portfolio, and my rationale for that is I was expecting the broader market to roll over, and even though juniors were cheap, for that to hit them in the short term. That, of course, did not end up being the case, and the broader market has only roared higher from here. But you'll remember this time last year, the level of sentiment was about as despondent as it could get. And so while I was nervous about it, because I did not see that broader market roll over as was anticipated, the deals on offer were just too good to ignore. So I made the decision to get more aggressive, and basically in October, November, December, and January of this year, we did 4 deals, and basically went from a double-digit cash position to fully deployed. And we've been fully deployed through the whole course of this year. I think excluding that January deal that I mentioned. All four of those were private placements, mind you. We've only added one new name to the portfolio, and that was a copper name in Namibia this past May, also via private placement. So we've been actually quite inactive for a lot of this year. Definitely have liquidated a couple positions where I've lost conviction in the thesis or thought the company was closer to fairly valued. But it's been 2024 has been a tale of being right and sitting tight. And absent any significant inflows here in the final couple months of the year, I really don't see us deploying into any new names until early 2025 at the very soonest. Doesn't mean that I don't see opportunities out there. I think there are many interesting opportunities out there, and I suffer from FOMO as anybody else does. But I've been pretty disciplined, just sticking with the names that I have conviction in, and I think have significant potential to appreciate 100% plus in value, and have been sticking to our knitting.
All right. Well, I mean, that's impressive that you can sit tight and be right for such an extended period of time and not, because I mean, I feel temptation almost every week to add something new, and especially on days like today. Let's talk about Star Royalties, which is one we've talked about in the past. They had news out 3 days ago on an acquisition of Saber Gold and their Copperstone, royalty in Arizona. What did you make of that news?
Well, it's great news for Star, and no doubt an interesting acquisition. As you know, Saber Gold holds the past producing Copperstone asset in southwestern Arizona, fully permitted. Relatively short mine life, at least on paper, but the opportunity to probably double that with appropriate amount of money put towards further exploration there. And but from Saber's perspective, they've been really stuck in the mud for a number of years here, and that comes from an ugly balance sheet. Until this deal was announced, I mean, they had close to $7 million in debt payable to various creditors, which is just not a workable situation for a sub $10 million market cap company. So I think from a Saber perspective, and really from Minera Alamos, who's the acquirer here, not a bad deal for either side. Saber shareholders are, seeing a 75% premium to the closing price of the Saber Gold share price, the day before the deal was announced. And, just last month, Saber Gold was trading, sub 10 cents. So decent premium for equity holders. The creditors that I mentioned are getting their money back in relatively liquid Minera Alamos shares. So they're no longer stranded. And I mean, from Minera Alamos's perspective, they're increasing their gold inventory with this deal by 35%, while only diluting shareholders 14%. So you're seeing accretive, at least from a gold inventory perspective. Minera Alamos is also diversifying their jurisdictional risk, from a pure play Mexico name to now having exposure to Arizona. So I think that aspect makes sense. They're also hedging against risk that permitting at their Cerro de Oro project, which is kind of second in line to make it into production, or at least was second in line to make it into production, is delayed beyond expectations. I heard a presentation from Minera Alamos's Doug Ramshaw recently, and he's talking about potentially building those two assets concurrently. We'll see if that comes to pass. But either way, if Cerro de Oro is delayed for one reason or another, they now have Copperstone to push forward here pretty aggressively into production. And they're paying roughly 0.2x for an asset that has a $150 million NPV at spot gold prices, and legitimate potential to get back into production in the 12 or 15 month period here, materially increasing Minera Alamos's gold production profile here. So I think it makes a lot of sense. I mean, the only potential head scratcher is that Minera Alamos was known as a open pit heap leach story, and now they'll be going underground at Copperstone. But Doug Ramshaw was quick to reassure shareholders that between the mine building experience they have on that team, there's ample underground experience, and I think the fact that this is brownfield's past producing asset also de-risks the proposition here to some degree. So we'll see. They plan to move forward pretty quickly with first production at Copperstone potentially as soon as late 2025. As an investor, I would maybe be a little bit more conservative and assume this is more of a spring 26 story, but we'll see. They definitely set the bar high in terms of how quickly they plan to get this into production. So next step from a Minera Alamos perspective is to announce a project financing package for Copperstone. If you look at the most recent economic study, I believe this was a PEA in 2023, we're looking at a initial capex to get this back up and running of around 36 million. I think you can assume there's been some amount of cost inflation from that number. But it's also important to note that Minera Alamos actually has a significant amount of equipment, processing equipment on hand, sitting in a warehouse, I believe, up in Quebec. That's probably being packaged up right now and in process of being sent down to Arizona. So the amount that they'll actually have to raise to get this going is going to be potentially 30%, 25-30% less. I would wager less than that $36 million number. So definitely exciting. From a Star perspective, which is definitely a name that we've discussed before, Robert, and I've also written about probably in the past 4 or 5 MJG investor letters. This is a really big deal. Star originally signed a streaming deal with Sabre Gold back in the fall of 2020. And the deal there was 3 separate tranches of US $6 million, so US 18 million in total, for a 6.6% gold stream for the first, I believe, 14,000 ounces, stepping down to 2.2% for another 4,000 or 5,000 ounces, and then down to 0.8% for the life of mine. And so Star forwarded 2 of those 3 tranches. So they gave 12 million US to Sabre. But because Sabre got stuck in the mud and was not performing on the stream agreement, Star was able to, within their contract, withhold that remaining 6 million. So again, US 12 million was deployed, and late last year they renegotiated the terms of the stream, where instead of the step down from 6.6, down to 2.2 and 0.8, it would be a flat 4% life of mine stream, paying 25% of spot gold prices. And in fact, in this negotiation, Star received just over $1 million US back, and also gets a little complicated. But Victoria Gold shares, believe it or not, totaling a few million dollars. Those were to be staged payments. Obviously, things have not gone to plan with Victoria Gold, but the long and short of it is once the dust settles in terms of this transaction, instead of those Victoria Gold shares, they'll be getting shares in Minera Alamos. And so Star will end up with this 4% life of mine stream at Copperstone. They'll have put down roughly, the 12 million US, received 1 million back, so a net 11 million. And they'll also own, at current prices, a little bit north of 3.5 million Canadian worth of Minera Alamos shares, which covers close to 15% of Star's market cap as is. And then most importantly, they have a credible group with mine building experience that is very likely to secure construction financing for Copperstone in short order, and potentially they'll start seeing cash flow from that stream as soon as late 2025, probably more realistically early 2026. But it completely transforms the story, and we've seen a little bit of a bounce in the Star share price on the back of the deal, which I think is appropriate. But this is a material development for Star, no question about it.
Yeah, it is. You know, Star Royalties has had some poor luck playing around with some of these royalties and you know, these ore bodies that are operated by juniors are trying to be advanced into operating mining operations by juniors. They had that Gold Mountain one in BC that turned into a disaster.
That's right.
Copperstone turned into a disaster. But now with MAI, they have a proven team of mine builders who actually can get shit done and keep their promises. So fingers crossed on Copperstone. Can you explain to me the first paragraph in the news, Matt, where it says 4% streaming gold royalty for life of mine at Copperstone, but then Star gets a cash payment back? What's that about?
Is this the news release announcing the deal?
Yes, yes.
Okay, let me pull
It's just
this up
like
quickly.
so they get 4% of gold mined during the life of mine at Copperstone, but then they pay back to the operator a quarter of the value of the gold that they receive. So like why is that deal structured like that?
Yeah,
And we have Doug Ramshaw here, but I'm gonna ask you because you know everything.
well, that's just a typical streaming transaction. So they're not receiving the full cash flow from the 4% of gold produced. They're receiving 75% of the cash flow from the 4% of gold produced. So I would just put that down to typical streaming structure. I don't think there's anything more to read into than that.
Okay. All right. So it's a normal way to do a streaming deal.
That's right. That's right. And I should add just more strategically for Star because I think you hit on an important point. Like frankly, and their management team would tell any investor as such, their mineral royalty and in this case mineral streaming investments have not gone to plan by any degree. Um,
Mm-hmm.
and Star is also a strange vehicle. And if you look at the company's valuation in the markets, it's not working out for them where they have, I would argue 60% of their NAV weighted towards royalty and streaming deals within the carbon offset space. And the remainder will say, roughly 30 or 40% of the NAV in gold focused royalties and in this case streams. And yeah, it's not working. People that are bullish on gold and investing in a gold and royalty streamer want 100% exposure to that. Maybe they can stand a little bit of copper exposure as well within the mix, but it's rare to find a gold and carbon credit bug out there. And so Star Management has been pretty clear that where they're seeing the biggest success from their investments, both in terms of an IRR perspective, but also in terms of a competition perspective, is within the carbon credit royalty and streaming space. And they've said on multiple occasions that their ultimate destination here is to monetize their mineral royalty and streaming exposure at the right time and at the right price, and really go all in and become a pure play carbon credit royalty and streamer. And my hunch is that they could have done that already, but not at valuations that they thought were remotely fair. And because Star has a good balance sheet and is generating some cash flow from their gold and royalty, streaming assets, namely Gold Mountain, there was no fire sale situation where they needed to sell. And so this is a material step for them where the value of the stream in the eyes of the market has taken a substantial re-rating in the positive direction. And I think this is one of two steps that they've been waiting for before they're in position to sit down with some of the other junior precious metal royalty and streamers out there and said, let's talk and agree on a valuation for our portfolio. This was step one, bring in a credible operator with a clear path to production at Copperstone. And step two is the turnaround at the Elk Gold Mine, owned by Gold Mountain Mining, which has suffered some major operational issues since it entered production a couple years back. My understanding, not from folks at Star, is that we're actually seeing some significant operational improvements, and things are going quite well at Elk as it stands. But we've yet to see that, publicly announced through to the market through updated NI 43-101 studies. Maybe we'll see, updated economics. So I think over the next 3 to 6 months, it'll become more clear to the market that things are actually going pretty well at Elk through public disclosures. And then at that point, it may make sense for Star to start having those discussions and look to sell their mineral royalty portfolio for as much as possible for the company, and then triple down on the carbon credit story, which again they were first movers in, and have some serious counterparties backing them. First between Agnico Eagle, and secondly late last year between Cenovus coming in and taking a stake in that business. And if you look at the valuation that Cenovus invested in December of 2023, and then adjust for Star's 46% interest in that joint venture, again, the three parties are Star, Agnico Eagle, and Cenovus. Star's worth 50 cents per share on paper, assuming that Cenovus paid a fair price. So that's a good, 50% above Star's current share price. And again, if that valuation is accurate by Cenovus, you're then getting all of that mineral royalty exposure for free. So this is a true sum of the parts story, and it's really a question of having that catalyst of actually crystallizing value within the mineral royalty portfolio. I think for that gap to be bridged. And it's also worth noting Star paid 40 cents per share, roughly 40 cents per share for their mineral royalties. So if they're able to get back their book value for those investments, that's 40 cents per share right there. If they're able to get back 75% of what they deployed, taking a 25% hit, that's 30 cents right there. And then you're basically getting the carbon credit and royalty business for free. So I think even after this, a bit of a re-rating we've seen on the back of the Sabre Minera Alamos deal, Star is still significantly undervalued.
Yeah, Star Royalties is a classic deep value play for you because it's not sexy, it's not well understood by 99% of investors. They don't hardly do any marketing. I've never seen the company do a presentation at a conference. Most people don't even know they exist, except for you and me and the people that are crazy enough to pay attention to these spaces. And then they actually have some real assets that have been validated by major companies. So it's a classic deep value play for you. I do want to get to the news on Swift from RDG, which I know is a portfolio holding, but I want to ask you one more question about Copperstone,
Sure.
and then we'll wrap up with Swift and Big Blue. So what could this be worth? Like, let's say Copperstone ramps up to operation at some point in the next 18 months. It gets back in operation, and it's generating gold from this stream. What could this be valued at for Star?
Oh, for Star specifically?
Yeah.
Yes, fair question.
The royalty stream for Star. I mean, it says 17 million cash flow, in the life of mine. But what is that worth to the company?
Yeah, well, I believe that 17 million is at a lower gold price.
2,500.
Oh, it's at 2,500. Okay, so
Yeah.
marginally lower, not significantly. Look, I mean, and that's also assuming that there's not an ounce of gold produced beyond the stated mine life. Even though I believe the stated mine life only includes, I don't know, we'll say 60% of the resources that are there. So with additional exploration or even just infill drilling, that can likely be increased. Look, I think if Star could get 17 million tomorrow for their stream at Copperstone, that would be a good outcome. I don't want to overstate the upside here from a Star perspective. Again, even if they got back the money that they deployed into Copperstone, and the money that they deployed into the Elk Gold 2% royalty, that's 40 cents per share right there. So for them to realize significant value from current levels, they don't need to convince a larger royalty and streamer out there, to pay a premium to what they put in. If they get their money back, that's a good transaction for Star. And I think with this transaction and the team coming in from Minera Alamos, it looks likely that they'll be able to get their money back. But whether an acquiring party values the Copperstone stream at 11 or 17, I think that remains to be seen. Maybe somewhere in between there. But again, there is meat left on the bone for any potential acquirer. Minera Alamos is not going into this to produce gold for 6 years and then shut down the mine. They certainly want to get that mine life into double digits, and I think that's quite possible. Because again, Sabre Gold has done nothing for 3 years here, and I think further exploration is warranted, certainly at Copperstone.
All right, final question. I got a hard stop at 12:58 because I got another space. I booked these back to back for some reason.
You're a busy man, Robert.
I am. So October 17th, Swift Gold Project. We got an update from Chad Peters, basically saying that they're encouraged by the visuals of the first hole at Swift. And it looks like Barrick is on to hole number 2 there at Swift. They're going to drill up to 3 holes. What did you make of this news update from RDG?
Well, I think it's encouraging. I'm excited to see the assays, and I think the market's reaction shows that there are other folks out there that are feeling the same thing. Look, I would note in the drilling to date at Swift, we've seen very healthy widths with certainly anomalous gold. I just pulled up the write-up that I did on Ridgeline in the July 2024 MJG partnership letter, as Ridgeline was our most recent featured investment. And at Swift, we've seen 51 meters at 0.19 grams per ton gold with a silver kicker, 670 meters. We've seen 37 meters at 0.29 gold. We've seen 49 meters at 0.45 gold. So we're seeing decent widths of anomalous mineralization, but obviously sub 1 gram per ton material at these depths is far from economic. So what I'm looking for here in this upcoming news release from Ridgeline, whenever it may be, of course, they have to agree with Barrick in terms of the timing and wait for the assays to come back and what have you. But I want to see grade, even if it's over narrow intervals. In this case, we know that there are the structures where there can be healthy width at Swift. We've yet to see the grade. So if we can see anything north of 7 grams per ton gold, even over pretty narrow widths, that would get me very excited as an investor. Doesn't necessarily mean that they're for sure onto an economic discovery, but it does check the box that Swift can also support the grades to be worthwhile. And then it's up to Ridgeline and I guess ultimately Barrick, as long as this earn-in agreement continues, to then get aggressive and actually drill out this discovery. My understanding, and I believe this was stated in the news release, this was the first hole of this program. The second hole was already planned out and is now in progress. It's a 500-meter step out from where hole 1 has seemed to have some success. So at least in the near term, we're not seeing an immediate follow-up on hole 1. It would be nice. I mean, if this wasn't Barrick operating the program and it was a junior instead, we'd probably be seeing a 50 or 100-meter step out. From hole number 1, that's not what we're seeing. So I think investors need to keep their expectations in check to some degree. But again, if we see the grades that one would hope to see in a deposit of this depth, I think that's a very material development for Ridgeline. No question about it. And I would hope to see assays next month. But again, that's kind of a negotiation between the MGM guys and Chad at Ridgeline.
Yeah, I mean, the way that that news read on the 17th, which is exactly 2 weeks ago, I was thinking that we would get assays, within 3 to 4 weeks. That's my interpretation. So that would put it maybe next week or the following week at the latest, but we'll see. It's very interesting that that the follow-up hole is a 500-meter step out from hole one, but that's how Barrick does it. I've seen the way they operate and the way they explore, and they are not interested in tight spaced holes. And for them, 100 meters is a tight spaced follow up hole. Like they want to drill step outs 300, 500 meters away and really prove up a model and prove up scale. They're not interested in smaller things.
No, they aren't. And what also has to remember, while this relationship has been, very friendly to this point, if they do find themselves onto a significant discovery here at depth at Swift, we're probably going to see some gamesmanship from Barrick.
Mm.
At the end of the day, if there's a significant Carlin-style deposit on the line, the obvious route here is for Barrick to ultimately either take out Ridgeline's interest at the project or take out Ridgeline as a company entirely. And, Barrick are shrewd, and they're not going to want to pay a single cent more in that scenario than they would have to otherwise. So I think, as investors analyze this news, also think about what Barrick's stated program is for 2025. One should keep in mind that behind the scenes, they may be more excited than is being let on. And there could be, some amount of gamesmanship going on here to, take Ridgeline over at some point, cheaper than they would have otherwise. But again, we're getting a few steps ahead of ourselves here. But I want to, remind folks that Barrick are shrewd operators, and they're also not a junior that's trying to splash news flow to the market. And if they see an opportunity to kind of draw things out and maybe get Ridgeline cheaper down the line than they would have otherwise, one should at least be prepared for that possibility.
I think that what you said is really important. Very valuable commentary there on how these things might play out if God willing there is a new discovery at Swift.
Yeah, let's see the assays first. Let's see
Yeah,
if we
let's
have
do
that
that.
grade. That's the first
Yeah,
check.
yeah,
But the
yeah.
one thing in Ridgeline's column, and the one advantage is they have is they are not a one-trick pony here. I think that's an important aspect.
Big
We could
Blue.
see Big Blue. We could see drilling. Swift aside, we could see drilling potentially in 2025 on 3 other Ridgeline properties.
Yeah.
100% funded program at Big Blue. The potential for South 32 to get going on their first drill program at the Selena project in kind of mid 25, maybe fall 25. And also, if NGM wants to retain their earn-in at what was called East Carlin, it's now called Black Ridge. They have to get pretty aggressive next year with expenditures. So unless they just want to cut a check to Ridgeline to keep that earn-in in good standing, I think it's fair to expect some sort of drill program at Black Ridge in 2025 as well. So that augurs to Ridgeline's benefit, where they have other potential value drivers alive and well within the company, even if Barrick decides to play the long game here and kind of slow roll them as it pertains to Swift.
Yeah, that's a very good point. Yeah, yeah. So all of this, news flow at a time when we are in a powerful gold, silver, and potentially even a copper bull market in the best mining state in the U.S. It's a good time to be an RDG shareholder. I want to ask you one more question, Matt, and then we'll wrap up. So the Swift deal they have with Barrick, it's $30 million, sort of staged, but $30 million in total if Barrick wants to earn up to 75% of the project. Can you, in 3 minutes or less, explain how you might value an agreement like that, between a junior and a major?
Frankly, no, not in 3 minutes or less. I would just say very quickly, one way, the more conventional and kind of, I would say, more sloppy way to think about it is to say, well, if 75% is worth 30 million, then 25% is worth 10 million, and just leave it there. And I think in bull markets, that type of valuation methodology can work. But of course, it leaves out some very key factors to consider. The first is whether or not the stake is free carried or not. And in the case here, it's a little bit complicated, but Ridgeline has better terms that are better than a contributing JV interest. So I think that's a win in Ridgeline's column. It doesn't automatically convert to where they have to put 25% of the money up once Barrick spends that spends that 30 million that's necessary. And I don't think it's worth getting into the details here for 3 minutes. The other important variable to consider is the length of time that is stipulated for the earn-in to be completed. If you're the junior and you have a major earning into your project, you want them to spend or be forced to spend that money in as short of a window as possible. And the good news here for Ridgeline is they do have I believe it's a September 2026 window for Barrick to spend that first 20 million. So in the case of Ridgeline, they actually did negotiate pretty good terms in regards to that second variable as well. So that is kind of, those are kind of two things to consider as an investor is kind of thinking this through. Again, cognizant that we're about to run out of time here. One way that I think about it very quickly, and this takes some proprietary research, but I'm willing to share the number. Right now, we're tracking 40 different prospect generators within the MJG, not within the MJG portfolio, but 40 prospect generators that are out there. Mm-hmm. And the median figure here is your average prospect generator right now is getting $3 million of enterprise value for every $1 million being spent by partners this year. So that can be one way from a relative basis to think about valuations. So again, if you're a median prospect generator and you had partners, it could be one or more partners spending 10 million over the course of 2024, you would have a $30 million enterprise value. And so that can also be a way to look at these deals, not the overall value of the deal, but how much is being spent this year. Because again, there can be a deal that looks really good on paper, 75 million, to earn a 75% stake. This project's worth $25 million to this, sub $10 million junior. But if that money doesn't need to be spent for 10 or 15 years, then what good does it really do you as the party that's optioned that project? So that's another way to think about it as an investor.
Time value of money, and a dollar spent tomorrow is worth a lot more than a dollar spent 5 years from now. Matt Geiger, CIO MJG Capital, fantastic conversation. Thank you so much for your contributions. And this recording will be up on my YouTube channel, Goldfinger Capital, in the next couple of days. Thank you, Matt.
Awesome. Thanks, Robert.
Cheers, guys.
Again soon. Bye.